Buddy, Jason here. Happy Thursday. Hope you guys are all having a great day. So today we're up 3,800-ish or so, but if we put that into perspective, Monday we had that huge drop. So last Friday, over the weekend, we were sitting at 213. We dropped down to 190, so that was a $23,000 drop in a day. And just digest that for a minute. I think my account at the time when I showed it showed only down 9,000. Maybe I was up here, but for some reason I believe with holding the crypto in the account, it calculates it a little bit strange. But either way, huge dip. Digest that. When you're making some of these plays, um, make sure that's something that you can handle. You can stomach it. So now relative to last Friday, we're up $600. So not too bad, but expected that from both. I thought that dip was temporary, and that's why we played some of the butterflies and things that we did, both on the SPY bouncing back, which we made money on that, and then we also played the butterfly on Tesla itself, which has been pretty good. Someone actually asked me, I think it was yesterday or the day before, whether or not it was too late to get into this play, and I said no. So if you were to, let's see, 22nd, if you were to buy it anywhere yesterday, it would have been 90, maybe up to $1 or something like that. But if you got it at 90 cents, I mean, you're up 10% already. And this has another few weeks, and basically we're looking for it to stay somewhere within these ranges. As time goes on, this will become more and more profitable. The risk with this is if it moves quite a bit to the upside and breaks out well above 760, 765, or of course it moves down again. But that's not to say once it moves up, that it can't just move back down, right? Or same thing, if it moves back down, it moves up, and then we have more time decay, which makes this inevitably more profitable. If you want to see exactly what the profit and loss chart looks like, open this play up in either options calculator or option strat, and you can kind of see how that should play out. So basically it's just going to be time on that. I did open up a Nike earnings play. So we grabbed a strangle on this. Strike price is here, expiring tomorrow, paid $180 for it. We are up 27% on this play, and this was going into earnings. Earnings are after hours today, but since we're already up quite a bit on it, I think I will just take profit on it by the end of the day. The Ivy is definitely up, which is why on our put side, even though Nike's gone up quite a bit, it's still holding a decent amount of value. Now, right after earnings tomorrow, this $76 put will probably be worth a penny. Let's see. Yeah, that'll probably be worth a penny. And if it doesn't go above 170, so if it doesn't move huge, both of these will become worthless. That is IV Crush for you. So that's why we're not going to hold it into tomorrow. If I did, there is a possibility we could make a huge return on it, but I would rather secure. I would rather just secure the profit that we know is 100% good. Let's see. Other than that, we have a whole bunch of plays which we are going to need to get rolled out or closed. I did open up some call credit spreads a couple days ago. Forgot to mention that. So let's see, all these 10-1s, tomorrow we'll get to rolling all these guys out except for like Tilrays, which we are going to let expire however they expire. And then most of these will get rolled out. Iron Condors will get closed. Call spreads will get closed. Palantir today is doing fantastic. Don't sleep on Palantir. I'm telling you, don't sleep on Palantir. It's my second favorite company, so I'm biased. Just don't sleep on it. I mean, it was not very long ago when we could have got this for, let's see, I remember when it was dipping below $20 here, and I was definitely buying it and averaging averaging down on my cost. But fantastic company. We have plenty of leaps on this guy. We've sold against our leaps, so profitable all kinds of ways. We're profitable on the shares, we're profitable on all of the on the leaps, and profitable on the calls that we're selling against them. Let's see if there's anything else we need to talk about. I did open up one more put credit spread. This guy, 710, 705, opened this one up today when we had a little bit of a dip on Tesla, just because we're moving into tomorrow. I wanted to get most of my cash deployed. Tomorrow we'll be rolling out the ones expiring next week, so then we'll be able to gain a whole bunch of cash from that. So I don't mind exhausting my cash today. It's fine. I mean, we still have a little bit, $1,000 worth of buying power, which isn't too much. And rolling out, last thing, rolling out put credit spreads. So had a little bit of a conversation back and forth about rolling out credit spreads. And I just want to show an example here, where something is in the money and you can still roll it out for a credit. If you're playing a less volatile stock, or if it's way in the money, or if you don't have very much time on it, this a lot of times will not be possible. But I just want to show that as long as you have a few weeks, which is ideally when you should be managing it, at least 3 weeks out, and let's say we have a 760, 750, right? So right now, this would be $395, basically $400. And this is in the money. We can actually do one a little bit more in the money. I think earlier I was looking at this and it was not so in the money. There we go. Even less in the money here, or more in the money. So this would be completely, a big loser if we had opened this up. So in this case, $485 is the credit. So basically we could have opened this up for $200 credit, moved against us, and now it cost us $500 to close. But if we take the same play, so 770, 760 for around $500, and we look out quite a ways, some of the time you would have to roll them out pretty far, but that same 770, 760, so this is just rolling it out straight and giving us more time. The credit is less than I thought. Not a great example there. Let's try to go out farther. Let's go out to June. So another 770 and buy back the 760. So 575. So in this case, it would have to be rolled out 9 months, which is a long time, 8 or 9 months. So that's a long time. But if you're underwater, you're getting screwed, and you have full faith that the underlying will go up over that period of time, this is a way to preserve capital. Yes, you only have an extra $60 on it, but you've preserved all of your collateral, and you've collected a little bit more premium. So in this case, you'd collect another, $70 premium, and you could use that to open up new positions, or depending on where your other positions are, you might use some of that capital to pay a debit to roll it down a little bit or out a little further. So a lot of times when we're thinking about rolling, we're thinking about rolling it out for 2 weeks, 3 weeks, or something like that. But to that, I'd say don't be shy about rolling it out farther. I have ones that I've rolled out, and I believe these ones were rolled out for several months. If I look at kind of the all chart, let's see. So February. So I rolled these out 11 months, but I lost no collateral on them. We're up $10,000. I could have just closed at that point. I could have taken the loss. I could have done, a myriad of other things, but this was my choice. roll them out farther. I had full confidence that Tesla would be back up above 700 by the end of the year. And so that's exactly how I played it. Same thing with, so those are rolled out in February. And then if we take a look, we do have these 19 that I rolled out as well. And if we look at the date on these guys, when were they rolled out? They were rolled out May. So I rolled those out quite a bit as well, just making sure we didn't take a loss on them. And instead of taking a loss, closing for a loss or whatever, now we're up $3,300 on this value. Some of these I may have paid a small debit, and small debit maybe $5 or $10 each one. But in most instances, from what I remember, I collected a credit. So whether it was $20, $50, $100, I don't remember. And then I've used that to open up more put credit spreads along the way with closer expirations, obviously, than 6-9 months down the road, and was able to collect all along the way. So hopefully that explains that a little bit. And that's one of the reasons that I'm comfortable holding all of these credit spreads. But one of the core things about it too is my vision of where Tesla will be 6 months, 9 months, a year, 2 years, 3 years, 4 years, 7 years down the road is very, very solid. So I have no problem rolling them out. Even if they're underwater for a little while, they can come back. Overall, it's a company that's growing 50% year over year. And even though it was definitely overbought for a period of time, but now I think all that's been reconciled and we're kind of more in a fair price position. But of course, that's fair price for today, not really looking forward several years. So in my opinion, wherever it's at, $750, $760, $800, $900, I still think it is a great value stock. All right, guys, let me know if you have any questions, and I will do the best to answer them. I'm probably not making any more plays today, seeing as we only have an hour and a half to go besides closing out my Nike Strangle. I don't see a reason to let that go. And then if we happen to have a drop, I may open another put credit spread. But that's about it. All right, guys, love you. We will see you tomorrow, and let's make a lot of money.